All right. Well, good morning, folks. It's a little bit past the hour of 10 o'clock, and welcome to another edition of the Kansas or the KAC Legislative Update. This is a live version, and we're real pleased that all of you are joining us this morning. I'm Bruce Clydney, Executive Director for the Kansas Association of Counties, and it's a pleasure to be back in front of the camera and with you all again. It's been a few months since I've had a chance to work with you, and I welcome you all to this offering. As you well know, in March, the Kansas Legislature passed Senate Bill SB13 to establish limitations on ad valorem property tax levies by taxing subdivisions without an additional notice and hearing prior to budget adoption. The bill repeals the tax lid law and computed tax limits imposed by previous statutes. However, the bill introduces the use of a revenue neutral rate, defined as the amount of ad valorem tax revenue levied in the prior year over the current year assessed valuation estimates expressed in mills. So we're joined today by an expert in this whole field. We're joined by Stacy Jaramillo. She's the team lead and Municipal Services Office of Accounts and Reports for the Kansas Department of Administration. And Stacy, I know, has been extremely busy the past couple of weeks, traveling around the state, doing educational programs for a whole host of folks. I first participated in one of her trainings just a couple of weeks ago in Lenexa when she did this talk for the county clerks. And so I reached out to her and said, hey, do you think there's merit in offering this same sort of training and focus on the county commissioners, because they have a role in all of this as well. It's very different than the clerks, but at the same time, there's a lot of similarities. And so she jumped at the opportunity to do that. So with that, without any further ado, Stacy, so thank you so much for joining us this morning. It looks like we've got a good showing, and we are going to be recording this, so we will post this to our website. So if you have friends or colleagues that were not able to join us this morning, we will be posting that as well as Stacy's slide deck. She shared that with us this morning, so we'll get that posted to our website as well, and we'll be pushing that information out to you. So without any further ado, Stacy, thank you so much for joining us and welcome.
Yeah, thanks for having me. Like you said, the details of how Senate Bill 13 works a little bit differently, but as governing bodies, you all have a major role in applying this to your budgets. So yeah, thanks for having me. We're looking forward to being here with you today. And let's go ahead and dive in. Like Bruce said, we've got maybe 45-ish minutes of material to cover. And then the rest of the time we've mapped out for you is just so you can ask questions and how does this work in your county and details. And I see that there's already a question in the chat, and Ryan, I will come back to that when we get there. So let's see, I think I can share my screen. Great, I can. I'm going to, all right. I'm hopeful that everybody can see my screen. I'm going to minimize that. Okay, great. So yeah, we appreciate the opportunity to be able to talk about Senate Bill 13 and what that means for you at the county commissioner level. If you'd like to contact us, our contact information here is here below. Below our names, email right now is the best contact. We are still working mostly remote. We do have our phones. I think I've told almost everybody. I was on maternity leave and our office came through and they redid our phone systems. I'm still working from the old phone system and it's not playing very well. It's not showing me my voicemails. It's not, doing much. So I keep putting my tickets in for our IT department. And as employees are returning to work, they continue to reprioritize me down. So I'm working on that. But for now, shoot me an email. And if you'd like me to give you a call back, put your phone number in there and I will call you back, but it'll just be from my personal phone. So happy to do that. If you've not ever checked out our website, it is down at the bottom. We do have updates about this bill coming soon, and just a whole slew of other things related to municipal budgeting and such for Kansas municipalities. So I want to talk about a mill levy calculation review, and not to my preface of this is not to insult your intelligence by any means, but to remind you of how this mill works and some of the pieces that can cause the mill rate to slide so easily, because it's going to be important as we get into the weeds of Senate Bill 13. Okay, so just briefly, a mill rate in property tax terms is just $1 per $1,000 of assessed valuation. Okay, so for your taxpayers, that's what that's going to mean to them. An assessed valuation is just a property's appraised value times the assessment rate. Okay, today I'm going to focus on, my next example is going to be based on residential property holders. Again, it's just a little bit easier to illustrate in an example versus larger businesses. If you'd like the assessment rates, you can certainly check out the Kansas Constitution. They're outlined out there if you'd like that light reading. It's available to you. But so for our first example, we're talking about a mill levy formula to find the value of 1 mill, and that's taking the total assessed valuation, dividing it by the 1,000, and then we've got the value, the dollar value of a mill. Okay. So like I said, I'm going to talk about a residential property holder. Let's say we've got one piece of real estate, my house, for example. Let's say its appraised value is $100,000. So I have an assessed value, therefore, of $11,500. Okay, so 11.5% times the 100,000 is that 11,500. Okay, so taking that 11,500, my assessed value, dividing by 1,000, that's going to equal 1 mill of $11.50. So for every mill levied on my property, I pay $11.50. So if my county wants to have a 2 mill increase, I'm looking at an approximate $23 increase on my property taxes just from the county's increase alone. Okay, so again, just how this works from a taxpayer's perspective. For those of you that have subdivisions in your counties that have a specific mill rate that they levy to, for example, I always say recreation commissions, but it could be any other, mostly small entities. Let's say they have a desired rate of 4 mills. So again, for them to figure their dollar figure, what they're looking at for their budget, they're going to take that assessed valuation coming from the June 15th budget estimates. Our county clerks are working to get those done now. So let's say they have a 1.3 million assessed valuation. We'll divide that by the 1,000, multiply it back out by that mill rate, that desired mill rate, and we've got a $5,200 levy. That's what we're expecting to levy for our subdivision. Okay. Now I'm going to plant this seed now, and I'm going to loop back around to it in a little bit. Holding that mill rate steady may conflict with the allowances in Senate Bill 13 unless you have that extra hearing piece. Okay, so it's not that you can't do it, it's just that there is an additional requirement to do that. So my Recreation Commission can't levy 4 mills every year necessarily without holding this extra truth in taxation piece. Okay, so again, planting that seed, I'm going to loop back around. Now, the last example, let's say we've got a city or a county or really any entity, and they need to levy $500,000 for our 2022 budget. Okay, let's say our estimated valuation is 14.5 million. And that's coming, like I said, from the county clerk's budget information worksheet. So in this case, our estimated tax rate is going to be 34.483 mils. And to get to that, all you're going to do is take your levied dollars over your estimated valuation and times it by 1,000 to bring it back to a mill rate. Okay, so 34.483 mils. That's what we're looking at in when we do our budget in the summer. Okay, let's say November rolls around, and in scenario 1, the final assessed valuations come in at 14.8 million. So our final tax rate then would be reduced. So as one goes up, the other comes down. Okay, so the final tax rate we're looking at is 33.783 mils. Okay, we're still levying the same amount of dollars as a subdivision, but our rate is slightly lower. In the more likely scenario of number 2, the November 1st valuations that are the final valuations in November are slightly less, or maybe even more than slightly less, because we have exclusions and appeals that are occurring throughout. So if you know you've got appeals and exemptions happening, be mindful of those final assessed valuations and what this can do to the budget that the governing body is going to adopt. Okay, so again, remember what I said, if one goes up, the other one comes down. Well, the opposite is true. If final assessed valuations, decrease, then the rate needs to increase. Okay, So in this case, if the city's valuation or entity's valuation is 14.2 million, the final tax rate is going to become 35.211. Again, entities receiving the same amount of dollars, that valuation is just causing that rate to be adjusted. Okay, so it's important to remember how volatile that valuation can make your rate. Okay, it will slide it very easily. Okay, so like I said, it was going to be a brief review over how that mill rate works, but mostly I wanted to remind you of the impact of that valuation on that final rate, especially as we go from creating our budgets in, June, July, August to November. Okay. So let's talk a little bit about Kansas Senate Bill 13. I don't think many of you are a stranger to this bill. I'm hopeful that this is not the first time you've heard about it. So the bill introduced in January made it through the Senate very quickly. Well, I think it was passed within that first week. It made it out of the Senate and over to the House. So the House worked its way through the bill, made it to the House floor. Some amendments were made to the bill on the House floor, including adding our school districts and then removing a threshold of, I think it was $100,000 at the time, removing that threshold for entities to be excluded from this bill. So now the bill applies to all of our subdivisions. And then, of course, the Senate concurred and the governor approved the bill. The governor followed up with the dates needed to be amended in the bill to help our school districts comply with the bill better, or a little more ease, I guess I would say. So they followed up with Senate substitute for House Bill 2104. But the meat of the bill, of Senate Bill 13, doesn't change. So it's important when you're looking at Senate Bill 13 to remember that many of those dates have been delayed by 5 or 10 days, and to recognize that, like I said, there are new due dates included in there. So like we talked about a little bit ago, like Bruce mentioned, it does repeal the tax lid. So that's one, at least, benefit of this bill. But it attempts to establish a base levy limit, and then it brings in this additional hearing requirement. So I want to talk about what that's going to mean for you guys. There is a penalty of refunds for failure to comply properly with this bill. And again, there's no margin of error and no threshold for dollars levied above the revenue neutral rate before they have to be refunded. It's just any amount above that revenue neutral rate. And now this is going to impact the budget that you're working now. So the next budget you adopt will comply with Senate Bill 13. Okay. And if you don't have access to the Kansas, or you don't know where to find the full bill text, you could definitely find it at the legislature's website. I'll encourage you to read the bill in its entirety, and also maybe even the legislative summary if you've not already done so. So like I said, this does repeal the tax lid. So any pickups that we had from CPI or abatement expirations or new improvements or annexations, things like those, our subdivisions will no longer pick up an automatic increase from any of those pieces. Okay, it's now, in place of that, we're looking at what's called a revenue neutral rate. So those of you that are familiar with the budget document, those computed limits, they're gone. With them went the election requirement. So again, that gives you back that piece. There's no longer a citizen election requirement in the bill. But now we have the revenue neutral rate. Okay, so again, that revenue neutral rate, the bill text calls it the tax rate for the current tax year, generating the same property tax revenue as levied in previous years, using this year's or the current year's total assessed valuation. And I'm going to add the word estimate, because there's no slide. Once that revenue neutral rate has been computed in June, there's no way to slide it back over to November and match it to your final rates. Okay, so your county clerks are working hard on getting that information out to you, but this will effectively be your budget limit, or sorry, your levy limit without this additional process. Okay, so taxing subdivisions can't levy in excess of the rate. So your county cannot levy in excess of that revenue neutral rate unless you have this additional hearing. Okay, and again, that bill brings in any political subdivision that levies an ad valorem tax. They did exclude the state of Kansas in that 1.5 mil. The give was that they would report it in the mailer that's going to go out next year. Those of you that have recreation commissions in your county, this will also include them. Depending on your familiarity with them, you may remember that they have a unique budget cycle anyways. So this will further complicate their process. So just briefly to get into the weeds of how this revenue neutral rate is computed. Again, this will be, handled by your finance offices, your county clerks will compute this, but so that way you're aware of how it works. Again, it's just that rate that is intended to be able to compare last year's tax dollars to this year's estimate. So that's what it's attempting to do. And I'm going to say attempting to do because it doesn't slide to the final. Now I've included the formula here that the rate is just last year's revenue over this year's valuation times 1,000 to express it as a mill. Okay. Example, we have an entity that's levying $80,773 last year. Again, my assessed valuation estimate is that 1.3 million. So I'm looking at a revenue neutral rate of 61.017 mils. Okay. For reference only, just for perspective, really, last year, let's say our final valuations were 1.2 million. We levied again that same 80,773. So our final mill rate last year, our final tax rate was 66.442 mils. Okay, so again, just another perspective reminder that that valuation difference can really change that mill rate outcome. Now, my city, in this example, I'm calling it a city, cannot levy, again, the keyword here is levy, above 61.017 mils without holding a revenue neutral rate hearing. Now, there was a question in the chat, and I'll address it now. In my opinion, and again, Ryan, I'm not going to be able to give you a legal opinion, so I'm going to probably defer to Jay or Bruce to be able to give you the legal opinion on that. But because the bill says that the city cannot levy more than the revenue neutral rate without holding that hearing process, that would be the county clerk's authority to be able to cap the budget if in the event that they would need to. Again, I'm gonna let Jay give you, or Jay or Bruce handle a more of a legal opinion on that, because I can't provide that to you, but that's going to be my opinion and interpretation of this legislation. Okay, so home counties are going to provide the revenue neutral rates to all their districts. So again, our county clerks are working through this. Again, I put some of these details in here, not for those of you that are going to have to work it individually. I know commissioners, most of you aren't going to have to be in the weeds, but I wanted you to understand the full process. One thing that I want you to just be aware of occurring is that taxing subdivisions that have funds with different assessed valuations, like our school districts and our townships, will have to have unique revenue neutral rates for those funds with different valuations. Now, if you think back to the spirit of the bill, those of you that watched this through, it is called truth in taxation. And so the key piece of this is really notifying taxpayers what's happening in our subdivisions, okay, in our local governments. Without breaking out those subdivision funds, like a school district with their general and their bond and interest and their capital outlays that may have 3 unique valuations. And if we keep in mind, if we have unique valuations, we have different taxpayers feeding into those. Okay, so we have to break those out so we can notify each taxpayer properly of the changes that will impact their home or their property. Okay, so again, that's the why behind that. This was a decision that came out of a special task force that we've created to include the Association of Counties and several other entities to make sure that folks are represented, but there are some unanswered pieces, like how do we approach school districts? Okay, so again, just more of an FYI on that piece. Now, I'm hopeful that most of you are familiar with the document that's on the screen now. This is the budget hearing notice. This is just a summary of your budget that spits out at the end, the document that's going to go into the newspaper to let your taxpayers know we have a budget hearing coming up, and this overall is our plan. Those of you that can see me, I'm very much a visual talker with my hands. So when you're looking at this document, you can see your estimated tax rate right here where I've put the arrow. And now the legislation does require that revenue neutral rate, your limit, to be included on the worksheet. For now, we've plugged it in right here underneath your estimated tax rate. And down below, you can't see, but it does define what that revenue neutral rate is. But let's say my subdivision wants to levy $79,019. Last year, we levied right here, you can see in the 2021 year, $80,773. Okay, so great. We know we want to levy less than. Our estimated tax rate is less than our revenue neutral rate. So we're thinking, oh, okay, we're in good shape. We can get through with this. You know, we don't need as much money. That would be fine if valuations were not so bumpy and causing our rates to adjust. Because keep in mind, the legislation says cannot levy above that revenue neutral rate. So it's created a rate cap for you. Okay, so again, in this case, if valuations go up, our final rate's going to come down, and we're probably going to be in good shape. You know, that's not, we'll get our $79,000. But remember from our mill rate conversation that if valuations come down, which they're more likely to do, just again, those appeals and exemptions and things out there, let's say valuations come down, what's that rate going to do? That's going to climb. So in this case, our rate can climb and we can levy $79,000 up until our rate hits 61.017 mils. At that point, the subdivision is going to be capped at this revenue neutral rate. Now, we've encouraged our county clerks to apply the cap when they're setting the levy if a resolution hasn't been passed. Again, the legislation isn't going to require it, but by and large, that's going to help the state's compliance with this, and that's going to help lower the cost of potential refunds that would happen if, you know, if this budget were, if a taxpayer brought a suit against this budget. Now, likewise, let's say my governing body wants to remain revenue neutral. We can do that. We're getting through. We're happy with the amount of dollars we levied last year. A lot of our smaller subdivisions can probably get by remaining revenue neutral. Fewer employees, fewer services. That's probably easier for them to achieve. However, like I said, the bill doesn't actually let you remain revenue neutral because you have to monitor what those final valuations are going to do. Unfortunately, you have to have this budget in place so far in advance, you won't have any idea for whether that valuation is going to jump up or down. Okay, so say we set our budget here. This is the budget we want to adopt. That's great, except don't forget what the valuations can do. So you're not required to follow a new action and a new hearing, but I'm going to encourage you to do it. Now, lastly, in this last example, the third scenario, your governing body knows that costs increase. Nobody's a stranger to inflation, and now even more so than ever before. Inflation rates are climbing pretty quickly. Well, there's not an automatic slide to cover that and to provide you an additional amount of dollars. You're just going to have to prepare for this rate hearing. I call it a revenue neutral rate hearing. I've heard it called tax rate hearing. Both are accurate, but you need to prepare for this rate hearing. Now, obviously, like I said, if you know you're going to hold this or you're going to levy above what you levied last year in dollars, you're holding the hearing. But I'm going to encourage basically anything short of require you to hold a revenue neutral rate hearing to guard those revenue dollars. Okay. Now let's talk a little bit about the hearing, and then I'm going to come back. I will come back and start at the top of the chat, and we'll answer every question in here. I just want to get through the hearing piece because hopefully maybe that'll help tie some of this together. Now, by July 20th, county clerks need to be notified of a governing body's intent to exceed that revenue neutral rates. You're in a unique position where your county clerks are involved in your budgets, but for the subdivisions underneath, or the taxing subdivisions in your county, they're going to need to notify your clerk by the 20th. So what that means is budgets no longer need to be completed by sometime in August. Your levied fund budget needs to be completed by July 20th. Okay, so we've lost almost a month in our ability to create that budget. Okay, so again, by July 20th, you need to know what you're doing with your levied funds at least. Now, for all tax years after this one, so starting for the 2023 budget, the county clerks are going to notify the taxpayers of every subdivision in the county's intent to exceed the revenue neutral rate. So it's going to be one mailer per taxpayer per property. So if you've got, a farmer with multiple properties, they're going to receive multiple documents. But the idea of that mailer is to notify me, the taxpayer, of every subdivision that's going to impact my property. So I don't need to be notified of, I live in the city of Topeka. I don't need to be notified of, those of you that are familiar with Shawnee County, one of the smaller cities, city of Rossville's budget, but I will be notified of the city of Topeka's budget, Shawnee County's budget, and all of the other districts that go to my property, okay? After 2023, so starting with the notification, so starting in 2024 with the notification of your 2025 budget, right now, the way the legislation looks is subdivisions will be responsible for paying the county clerks back that cost of the mailer. So don't forget that at the county's level, it'll be a smaller cost relative to you, but for your smaller subdivisions, that cost could be significant. For the first 2 years of that mailer, the state of Kansas should be reimbursing clerks for that cost to the county. Okay. After that, like I said, subdivisions will be responsible for for reimbursing the county clerk their portion of that mailer cost. So those rate hearings now are going, if you're going down this path, and you should go down this path, prepare to hold a rate hearing, prepare to understand how this feels, and especially with as picky as that word levy becomes in this legislation, I again encourage you to hold this hearing. So August 20th through September 20th, this is the date range that you can hold that rate hearing. You can't hold it on August 19th, and you can't hold it on September 21st. It has to be in this block of dates. Okay, I know that this goes outside of the budget law, the normal budget law, where you would normally submit those, late August. There is a provision to allow your budget to come in later. Now you can hold your rate hearing with your normal budget hearing, okay, as long as you hold it prior to that budget hearing. So if you're holding them at your normal commission meeting on, a Monday in September, that's fine. Just hold your rate hearing first and your budget hearing second. Make sure you record those clearly. In addition to that mailer that's going to go out starting next year, you'll need to notify your taxpayers in the newspaper, like you always would, of that hearing happening, okay? Yes, you can combine that with your budget hearing, your normal budget hearing, or you can have a separate notification. It's up to you. Right now, our office has not provided a sample, but I'm working on those samples, and I hope to have those on our website very soon. Again, if KAC has got sample documentation, I'm sure they'll release that to you. Bruce and I haven't had that conversation yet, so hopefully I didn't sign him up for something that he wasn't prepared for. But sample documents are coming down, at least from our office. You're welcome to use it, but certainly not prescribed. Okay, so just like your budget hearing, your governing body will need to notify your taxpayers that 10-day time frame. Okay, and I'm gonna phrase this to you the way that the legislation includes it, because they were oddly adamant about it in the Senate committee, at least, that taxpayers need to be given the opportunity to be heard without reasonable time limits and unreasonable restrictions. So it's important that you provide them that time to discuss that revenue neutral rate, or that your tax rate with you. Now, a unique piece about the revenue neutral rate versus at least your normal budget hearing is that your governing body at the conclusion of this rate hearing will need to hold a vote at the hearing to adopt a resolution to exceed approving a rate higher than the revenue neutral rate. Okay, so again, that vote needs to occur, the resolution vote needs to occur at your rate hearing. The budget vote can always happen after the budget hearing, but this part needs to occur during your rate hearing, okay? Which means governing bodies need to be present. So I know many, I don't think that that's probably an issue at the county level, but for our smaller governments, townships and such, those of you that are involved in helping with that, that piece, the township governing bodies will need to be present to vote on their own resolutions. Again, don't forget, you have an additional publication requirement with that. I call it a revenue neutral rate hearing. You can call it a tax rate hearing, whatever makes sense in whatever it's going to be commonly referred to in your community. That's what I will call it. Needs to have some sort of a publication. It can look like this, but again, this is certainly not prescribed to you. Now, I think most of you probably have a website that's maintained. That hearing notification needs to also be on your website. You don't have a responsibility to publish for subdivisions in your county, but the county's rate hearing needs to be included. Okay. Now, if your governing body does approve to adopt that resolution to exceed their rate, at this point, it goes kind of back to the old way we've always handled things. Now the legislation says the subdivision or your governing body cannot adopt a budget with a rate in excess of the published proposed rate. So if you've published a rate, remember our example, I needed an estimated rate or proposed rate of 64.981 mils. Now I can adopt my budget at that rate, and valuations can do what valuations are going to do. And my revenue stream is now guarded. What was it, like 86,000? So I can still levy my dollars. Okay. We spent a lot of time, and I think everybody has kind of spent a lot of time saying we levy by dollars. Don't focus too much on the rate. The rate is really just a mechanism to apply it to the taxpayers and to raise that money. Well, now you have to monitor your dollars, but you also need to be very cognizant of what that rate's going to do. Okay. And like I said, the budgets now will be due October 1st if you're holding the rate hearing. And again, one more time, please hold that rate hearing, because your penalty is a refund in any amount levied in excess of that revenue neutral rate. So like I mentioned very early, we've requested and encouraged the county clerks to place a cap on the budgets that do not hold a hearing and pass a resolution, because that refund could be very costly. So if your county and your governing body doesn't want to go through this process and hold this hearing and put this in your taxpayers' mailboxes, that's fine. Just work with your clerk to know where you may want that cap to be applied if it comes to it. Okay. That's exactly that. I jumped ahead of myself. So the next slide says what I just discussed. Work with the county, with your clerks, to make sure that the cap is applied in a place that you can live with a potential decreased revenue. Okay. Again, I've included the timelines just for perspective, really. And I think now is a good time. Yep, timelines, checklist. Okay, let's open it up. I'm gonna pull up my chat here. Let's go through the questions that you've got. I'm gonna start at the top, but keep putting them in there as you think them through. Oh, we got through that faster than what I had intended. So I think normally I open it for questions halfway through. That's maybe why. Okay, for the state forms, do we still have to fill out the tax lid form, or is that no longer required? That is no longer required, Robin. So the question is there still a requirement to fill out that tax lid document? And there's not. So the tax lid on all of the state forms that are on our website now has been removed. Any reference of a CPI has been removed. So if you're looking for those, they're gone. They don't play anymore. But in the same breath, that election piece is also gone. So if your governing body, this would probably never happen, but in the extreme scenario that your governing body wanted to double its property taxes, you could do that as long as you go through this process. And there's, like I said, no election requirement. Again, that's quite an extreme scenario. I don't think that would happen, but. And yes, there's a question about emailing the slideshow out, and I sent the slide deck to Bruce. I think he mentioned that he's going to publish it to the website, but it's certainly free to distribute to all of you, so you can work with it with your colleagues, and unfortunately, so for as complex as this bill is to all of us, we're much more familiar with this budget process than our taxpayers are going to be. So now we're in a dangerous position where we're going to notify our taxpayers something that's so complex, they're not going to understand it. And I think that there's potential for that to cause more confusion than good. Okay, scrolling down here. Can the rate hearing be held at the same time as the budget hearing? And yes, your rate hearing can be held on the same day as your budget hearing. What I would do with being, you know, I come from audit and you know, I'm more of a cautious person. I'm going to tell you to open in your minutes, open one hearing, open your rate hearing, hold that hearing, give the taxpayers that opportunity, vote on your resolution, close that hearing, then open your budget hearing. And so I know it's counterintuitive. They can be held together, but make sure you hold that rate hearing piece first.
Stacy, if I may jump in for just a second, I know you
Sure.
asked or you answered a question that I had. I had been out in one of the counties and they said, well, can we hold all of our rate hearings at the same time in the same space? And you had said, sure, why not? You know, reach out to all those smaller subdivisions, because in fact, in a lot of these counties, you've got the same individuals on the same boards. You know, one person's on 2 or 3 boards, bring them all together to the same space and open one meeting, have the hearing, close it, open, and just work your way through all of those little taxing subdivisions and knock them all out in a day or two and be done with it.
Definitely what I would do. You guys are in a unique position where, yeah, like Bruce said, you're covering multiple districts and you know, assisting administratively in those pieces. Bring everybody together. I know our farmers and things, this is going to be harvest time, but still get them together, get it all done one day, one time. Yep. And just work your way through that list, create a full agenda, mark out all your townships and your cemeteries and your fire districts and such, and just walk your way down the line.
And I would say, this is Jay jumping in. If you do plan on doing that, make sure you allocate enough time to get through all of those, because obviously people may have some comments and things. And because the law restricts you from being able to limit the time unreasonably, you want to make sure that you have plenty of time to get through whatever hearings you're going to get through that day. So, I mean, you may want to block off enough time to make sure that you can go through those. And that may take more than a couple of hours, or you may at least want to have that time allocated just in case.
Yeah, that's an excellent point. With the, like I said, they like you mentioned, they were adamant about unreasonable restrictions not occurring. So yeah, definitely a good point. Start these here. And this year will be a fantastic year to test this. It'll help you to get a better feel for what the impact is going to be for your taxpayers showing up to these hearings. Next year will be, you know, the hearings will have much more visibility as they're showing up in mailboxes. I am terrible at checking the newspaper for these kinds of things, but I do check my mailbox. So as a taxpayer, I'm going to see this more so than I would have found the other hearings. So practice run this year without the mailer, and then next year, yeah, again, it's coming to your taxpayers' mailboxes. Okay, an example of what the county, yes. Yeah, Ryan, the county clerk's notification, Ryan, I guess I'm confused. Are you asking, well, the county clerk's notification to subdivisions that includes the revenue neutral rate, that piece has been published to our website. So the bill asked that we update the form that's on our website. So I did that. So that was a pretty simple update. If you're asking what the notification to the county clerks looks like a certification to the county clerks, I've not created anything. I can create some sort of a template for the subdivision to sign off on and certify to the county clerk that they're intending to exceed that revenue neutral rate. But basically what the subdivisions need to, so those of you that are assisting others, what the subdivisions need to provide to the clerk is the proposed rate and the rate hearing information. So the location, the date, and the time of those pieces. Okay.
Stacy, if I may jump in again,
Yep.
can if you haven't already, 'cause I don't think I heard, would you talk just a second about what the notification from the clerk to the taxpayer needs to look like? I know that you and a whole group of people have been working on a template, but what is that process going to look like?
So we've not, that's a good question. And I didn't include a lot of that in the slide deck. Let me go back to the piece that talks about, I don't think I even included much of the laundry list. So in the bill, there is a full laundry list of things that will be included on that notification from the clerk to the taxpayer. So we are working on a template. Like I said, KAC has been involved, that mostly just for visibility. I don't know that you guys have, and other than a couple of opinions on things, we are working on that template with the league and the software programmers. So counties, we are working with your tax software programmers to make sure this is implemented, but we have not begun phase 2. Now, the laundry list of things that are included in the bill are going to make this notification look, let's say, busy, for lack of another word. It is messy. It's going to include things like last year's tax dollars, which is great. The proposed tax rates, again, fine. What that proposed tax rate has on the property, again, those seem reasonable, but now it also wants percentage changes. It wants what the tax rate or what the tax levy would have been at the revenue neutral rate. It wants a whole list of things on there. So us trying to find a way to condense this into a useful document coming to your taxpayers, it's wonky to say the least. We'll call it wonky. Again, lack of a better term. The bill, like I said, laundry list of items. If you've got suggestions on that and you've not already been kind of included in this task force, let me know as we kind of work our way to phase 2, especially our county clerks. I think we've got some clerks and deputy clerks and things on the line. If you want to be included in that, let me know, and we'll see what we can do about opening that task force up just a little bit as we gear up for what we're calling phase 2, to talk about that mailer and that, the cost allocation of that mailer and how that'll all work.
And I think that rolls right into the next question from Robin, because she's talking about the different funds. So this is a great one for you to.
Yep. So working my way. Okay. Thanks.
Yeah.
Is the revenue neutral rate established by the entire county for each individual fund? So for the county level, I don't believe that you have funds that will have different valuations. So counties should have one aggregate revenue neutral rates. So under that rate, you will be able to reallocate monies back and forth as you see fit and as is legal. So you're right. So if your general fund is greater and your mental health fund is less, it would be a total revenue neutral rate for the full county. And like I said, you can rearrange things. So no, I would not adopt a resolution saying that just the general fund is above prior year's ad valorem. It would just say something, again, on your resolution, KAC may provide some better samples. I'm working on a sample, but it's going to be extremely simple because I'm going to tell you in your resolution, don't bind yourself to more than you need to. What I would say is something, be it resolved, Eisenhower County has adopted and approved a tax rate above the revenue neutral rate for the 2022 budget year. I don't think I would put my rate in there because you could subsequently create yourself a new levy limit. And I don't think you want to do that. I would just say we've adopted and approved to exceed the revenue neutral rates. So and again, I would not in my resolution include each fund's rate. Again, that could subsequently create yourself a new cap that you don't want to do. And again, non-legal opinion here. So
I love the suggestion though.
If you've got questions about, the legality of your resolutions, check with Jay and Bruce. Sorry, again, signed you guys up for that.
That's okay.
The county would have to make the refunds, correct? Yes. As far as I'm aware, in the way that the processes occur, the county treasurer is going to be the only one with the ability to refund taxpayers any amounts levied above that revenue neutral rate. So again, it's important to hold that rate, but if you choose not to, it's important that a cap occur. So work with you, if you're choosing not to hold this hearing, work with the clerk, the county clerk, to make sure that the cap is a place where wherever you're willing to take a reduction in tax revenue. So probably not your bond funds, but maybe, I don't know, general or something. So Robin's next question. So even if we're going to, even if we say we're going above the revenue neutral rate and the assessed valuation decreases, the mill rate increases, is it still capped on the levy we published? No, Robin. At this point, after you've held the hearing and passed your resolution, again, I didn't write this, so just because I'm a state employee does not mean that I got the opportunity to write this legislation. I'm going to throw that out there real quick. The second side of this says that you cannot adopt a budget that exceeds that published rate. So you can adopt your budget up to whatever you've published, and then as rates do what they do, you're going to levy and realize whatever dollars you would as normal. So that's the way the budget laws always worked, or at least in my tenure here and up until recently. So the budget law, as you publish your hearing, you can't exceed whatever you've published, but you can decrease it, of course. Then as rates do what rates can do what they're going to do, you're fine. Unfortunately, with this legislation right now, it says cannot levy on the first half and then cannot adopt a budget on the second. So it's two different types of processes here. Again, very confusing, and I know that it's going to cause some issues this year. How many members of a three-member board need to be present at the RNR to make the decision to adopt the resolution? I'm going to say you need to have the majority vote. So you need to have, in this case, all three board members probably available to adopt, because again, that governing body is the one who's going to be responsible for adopting the resolution. Jay or Bruce, if you guys have a different feel on.
Yeah, it looks like Jay answered that question for.
Oh, did he?
And just saying that
Great.
A quorum is needed. So
Yep, that's exactly where I was going.
Members to be present at a minimum. So
okay.
Thank you,
So
Jay.
yep, thanks, Jay. Okay, I've heard there's a trailer bill coming regarding Senate Bill 13. Do I know anything about that? The only trailer bill that I would be able to know, that I'm in the know of, and as you know, a state office, we're not able to kind of lobby and be involved in some of those conversations. So the only trailer bill I'm aware of is that 2104 KAC. I'm going to let you guys take over on any additional legislation. Again, I can do what I can do, but unfortunately I can't advocate all that much for our local governments. I can educate, but I can't as much as I want to, because I know this bill has some pieces that need to be lined out. I don't have that authority.
Yeah, and I would just say, I think the only trailer bill that I've seen for right now is 2104. There may very well be other bills that come out later on that are also that touch on some of these pieces if we discover problems and issues with this process as we go forward. But for right now, 2104 is the only trailer bill for Senate Bill 13.
Yeah, thanks, Jay. Yeah, so and the only thing that 2104 did was amended the dates to Senate Bill 13. So the dates that I provided in all of our documentation include the correct and updated dates. Now, if we get the opportunity to have this same conversation with the committees or anybody, we'll take that. But again, they don't always call me and ask me what I think. So yeah, if we have the opportunity to explain to them the holes in this bill and the way that some of these things work, we'll take that as far as an informational hearing goes. I'm sure Bruce and Jay will jump even faster at the opportunity to help with those. So, and then the last question I'm seeing so far is, if the county needs to do a refund to another entity, can they be charged for the expense of the refunds? And I've not the bill doesn't address that, but I believe that, the entity that caused the refund, so let's say my city of Ike, for instance, because, they're pretend and we can, poke holes at them. So if the city of Ike levied above their revenue neutral rate and didn't pass a resolution to do so, then they would be responsible for the cost of that refund. Again, the bill doesn't specifically say that, but.
Yeah, Stacy, spend just a second just sharing kind of some of the background information that you have and the rest of the group kind of talked about, that there really is no one organization or state agency responsible for this. And you kind of have taken this under, I think, by your own, I mean, was it thrown into your lap? But I mean, you weren't necessarily specifically designated in the bill to be doing what you're doing, right?
Certainly not. No, our bill, the bill, it didn't create a policing or regulatory authority. So just, because what Municipal Services does for local governments, our goal was to make sure we had a unified front, a unified education message. We didn't want to be passing on information that was separate or different from what the league or what KSC is passing on. We wanted it to be the same message because in my opinion, the more cohesive education and communication we have, the better we're going to have, or the more compliance we're going to have with this bill. And again, the bill is, I can't probably speak my full opinion on this bill, but it's like, I think I called it wonky earlier. There are a lot of pieces that don't play very well together. So in order for us to have as much compliance as possible, yeah, we created this task force. We're working to try to publish, information to our website. And you're right. No, I have no authority over this bill. At one point with Senate Bill 294, those of you that have watched this process, this is not a new idea that just showed up. So I think this idea is going to be around for quite a while. It's not a new thing. But those of you that saw 294, they did try to give us the policing authority over this. And so we analyzed what that would look like for our office. Those of you that don't know, our office is myself and one other employee. And we've got 3,600 some subdivisions under, that come to us for certain things. And so again, we didn't have the capacity to police this. So we pushed back on that and said, we can't do that without an additional, staffing budget. And our fund we're funded only from our audit fees. So those of you that file your audits, you pay that little audit filing fee. That's what pays for this little tiny division over here in the state of Kansas. So Bruce, you're right. Yeah, we kind of, I don't know, got thrown into the line of fire, but really it helped us as well to make sure we had a cohesive effort to help you guys. And we've pushed a communication. Hopefully you all saw it. If you didn't see just a quick memo summarizing this bill, if you didn't see it, let me know and we can get it to you. On that, there's also, I know that the league has created they call it an infographic. It's just it's a much better looking document and, a more appealing to the eye looking document, but it's all the same information. So use whatever resources you can to explain this to your taxpayers and explain this to the subdivisions in your county, because you have the unfortunate job of educating this further.
It looks like a few more questions have popped in since.
Not overly familiar with Zoom here. I use Teams regularly, which lately has been not my friend. So I'm kind of glad to familiarize myself with Zoom here. Okay, starting 40. Okay, so I think was the last one I answered Janet's. Okay, so Sandy has asked, does the reimbursement for the mailing notices in 2022 and beyond only include the postage costs? Sandy, that's an excellent question. I don't think it would only include postage. It would at least include all other printing materials. But for now, I don't have a good feel for whether or not that would include labor, I think is probably what you're asking. I'm going to read between those lines. So I don't have a good feel for whether or not that would include that. That's one of those task force decisions. Again, no regulatory authority. So we've kind of all brought it upon ourselves to solve some of these situations until we have better guidance in legislation. So I don't have the exact answers, but I do think that it would include a little bit more than postage, at least at a minimum would include the printing materials and such. So if a subdivision such as Recreation Commission or Cemetery District decides to exceed the revenue neutral rate, do they hold their own hearing, or do the county commissioners have to be involved in the hearing? That's a good question. And county commissioners would not need to be involved in the hearing unless they have some sort of an oversight on that board. So the governing body of each subdivision needs to be would be responsible for holding their hearing and passing their own resolution. So Recreation Commission boards, they're going to hold their own hearings. With cemetery districts, if they've got their own board, they're going to hold their own hearings. Yeah, governing bodies, like, I mean, most of you know, the budget is going to be probably one of your most important duties, because that allows you to do any and everything else that you need to do. Now this rate hearing is going to be even more critical. Okay, on Robin's comment about the levy being capped on what they published, did you say the levy could increase if the valuation dropped? If the levy isn't capped, is the revenue capped? So the levy is not, the dollars are not capped. The bill doesn't talk about the dollars. The rate will be capped if the resolution and hearing are not, if that process doesn't occur. So if the government doesn't pass a resolution, then I would consider that revenue neutral rate as a levy cap. Okay, again, failure to do so could result in refunds, and that's costly. And that's why we're saying, call that revenue neutral rate a cap, consider it that way. And of course, the caps have to be applied at the fund level. So we would encourage everybody to work with you, Donna, to make sure that the cap occurred where they would want it to be. Now, after the resolution has been passed and the hearing has been held, then there really is no cap any longer. At that point, you're only restricted to whatever adopted budget that you need to adopt. That estimated rate can do what it needs to do. My hope is that in the very near future, we can amend the language on the beginning side of that statement to not say cannot levy above the revenue neutral rate, but cannot adopt a budget above the revenue neutral rate. That would make this a lot easier to digest and to work through and to comply. The timeline really puts the county clerks into a crunch, and that is 100% accurate. Any chance PVD could certify the state assessed utilities and have them out before June 1? I can't speak to what PVD can do. The June 1 is a statutory date. So I can't speak to whether or not they can adjust that time frame. That may be something they'd consider in the future, but I can't tell you what KDOR can and can't do. But you're right. And I empathize that that's a very tight time crunch. Those counties that have shared districts have even tighter, because they're going to have more communication to make sure that the shared districts are properly reported. There are a lot of moving pieces, and to make this work, that's why we've created the task force, and that's why we're doing what we can and spending as much time as we can talking about this bill, because it's a mess. Please don't call the legislature with my comments. I mean, again, the spirit of the bill, and I'm going to call them unintended consequences. I just think that there's lack of knowledge about how this applies to our current budget process and what we're already doing. And so I'm going to say unintended consequences.
Yeah, I get it. All righty, folks. Well, we've drawn up upon to the hour of 11 o'clock, and we cannot thank you enough, Stacy, for joining us this morning to do this presentation.
Yeah, glad to do it.
Very, very interesting. I've learned something each time I've listened to it. I value all of your knowledge, and I sympathize with all of our county staff that are having to, like you said, unravel this and deal with it. I saw Rick was on here earlier, and I appreciate all that Rick has done for the state of Kansas and all of his colleagues around the state. So, and to you too as well, Stacy, thank you so much. Like I said, we are going to be posting this out to the web. We do have the slide deck that we'll be sharing. We'll be posting that also out to the web. Any other final thoughts, Stacy, before we go?
I don't have any, but thank you for highlighting Rick Pifo in Harvey County. He was instrumental actually in trying to piece a lot of these things together. And he's got a lot of great ideas on how we're going to get that mailer set up, and he's taken the legwork on all of that. So he's been fantastic. And those of you in Harvey County are, in my opinion, very lucky to have Rick. So
very good. Fantastic. All right. So without any further ado, thank you so much, folks. Have a great rest of the day. Enjoy your weekend, and stay safe and stay dry, let's hope.
yes, let's hope. All right. Thanks, everybody. Take care.
Bye-bye.